Hello and a warm welcome to the final presentation of our high-tech engineering conference today at MBB Research. Up next, we are pleased to welcome Duerr, presented by Matthias Christen. Before we begin, just the housekeeping note, the session is being recorded and all participants are in a listen-only mode. If you have any question, please feel free to submit them via the chat box and we will get back to them in the Q&A session. And with that, let's get started. Mr. Christen, the stage is yours.
Well, thanks a lot, ladies and gentlemen. Good afternoon. I'm happy to talk to you and give you a presentation on Duerr about current topics, what's going on in the company, and how we assess the current market situation and strategy. So let's get started. First of all, I hope you all know Duerr. Despite this, I would like to give you a brief overview who we are and let's say what is the DNA of our company. Duerr stands for, in simple or plain words, sustainable automation. So this is basically what our business is about. We help our customers to make production processes more sustainable, which is very important these days, especially in the automotive industry. And on the other side, we are specialists in automating production processes. So if somebody asks you who's Duerr, this is probably the two most important terms or words which you should keep in mind. We are a roughly 4.5 billion company in terms of sales, global reach, very well-established regional businesses. So we can use different regional demand cycles, be it in China, in America, and in Europe, really in any place in the world. What we are renowned for is that our customers get a full package from us. That means they not only ask or order a machine, but they will have it tailor-made. They will have it completely commissioned. They will get a complete life cycle service. And especially in our large projects, which is mainly paint jobs for the automotive industry, they will get a best-in-class project execution. And this is, apart from the technology we are leading in, this project execution quality is one of the most important reasons why customers tend to choose Duerr, because it's high volume investment. Big paint job can cost up to 200-300 million euros. And they would place it rather with a reliable partner than with a, let's say, not so reliable, but maybe a bit cheaper partner. As already mentioned, we've got these fundamental drivers like sustainability and automation. And maybe what is also important is that we not only help our customers become more sustainable in terms of lowering the footprint of their production. What is also important is we help them to produce more sustainable products. For example, e-cars are more sustainable than ICE cars. Our HOMAG division, that means woodworking, they've got the equipment to build completely CO2 neutral houses which are made from wood. You can use our technology to produce solar panels. So the whole, let's say, move towards more technological products is also covered by Duerr. And we see, despite the fact that sustainability these days, let's say in political terms, has become a bit less favorable than it used to be, let's say 2, 3, 4 years ago, we still see it is a fundamental driver because it helps our customers saving money. Just one example on that. A paint job for the automotive industry consumes roughly 50% of the energy you need for the production of the whole car. That means only painting consumes 50% of the energy. That means investing in a sustainable paint job means a tremendous reduction on your operating costs. And this is something our customers still cling to. To be a bit bold, it's not the question of Mr. Trump, does he like sustainability or not? It's a question of being ready for the future. And it's a question of really optimizing your cost structure. Okay, let's move on. I told you about this sustainable automation as the core of our business, and I would like to show you in what way we developed our company during the last 1.5 or 2 years very diligently into this direction. Since, let's say, the beginning of 2024, from a portfolio point of view, we did a lot to really focus purely on the core business around sustainable automation. We made our company much less complex. It had 5 divisions before, and since, let's say, 1 year or beginning of the year, it's only 3 left. At the same time, we empowered the management of the 3 divisions with more, let's say, entrepreneurial leeway. That means we made communication with the holding easier and gave them more leeway to take their decisions. What we expect from the divisions is to deliver decent results, but they are, let's say, more free in the way how to achieve them. At the same time, one part of our portfolio-oriented strategy, that means also selling parts of the business, which I will comment on in a few seconds. Of course, this helps us to further improve our solid balance sheet in terms of reducing debt leverage, and maintain our really good cash position. So what did we do in concrete terms? In order to really focus on sustainable automation and to become leaner, 3 instead of 5 divisions, we decided to dispose of our environmental technology business. This is a business worth some 500 million sales, enterprise value was 385 million euros, and we expect net proceeds of 250 to 270 million euros. And the book gain after tax, and this is really appreciable, of 160 to 190 million euros. This will become effective probably at the beginning of November, when we expect to have our closing done. So this was one major step to make the company leaner and to unlock capital in a, let's say, rather not so core business, which will give us more leeway to further development, to further develop the remaining business. Next slide is the current company setup. As you can see, it's only 3 divisions left. These are automotive. Until half a year ago, our automotive business was split into 2 divisions. We stopped with that, merged it into the automotive division, into one strong division, which not only makes, let's say, the analysis, the research on Duerr easier, but which mainly helps us to be able to become an even better partner to our customers, because we have a fully integrated order execution, we have a fully integrated innovation process, and this will help us, and we can already see this, to, on the one side, widen the gap between Duerr as the leading market company in the market, and on the other side, to improve earnings. As you will see in a few minutes, we were able to really bring up the margin in this business since the low point, let's say, during the Corona crisis. Then we have, as a second division, the so-called industrial automation, which mainly consists of the balancing technology, which is under the Schenk brand, and the newly acquired businesses in automation technology. This is mainly the BBS group we acquired in 2023 and Team Technic, which was acquired 2 years earlier. And especially the acquisition of these two companies worth around 500 million euros is part of this sustainable automation strategy. That means strengthening the automation part of our business because we firmly believe that automation is a future technology given reshoring of production into more costly or labor costly countries, the lack of available labor force, and of course, better ways to automate processes which, let's say, 10, 20 years ago, you would never thought you could automate them. The third mainstay of our company is woodworking. This is the HOMAG Group, which is the world market leader in woodworking. That means furniture production technology and technology to produce wooden houses. On top to this portfolio-oriented, focused, sustainable automation strategy, we announced to take quite significant cost out of the company in the administrative structure. So the logic behind is easy. We sold part of the business, so we need less administration. And of course, you always have to check, is the administration maybe a bit too much? Can you reduce it without losing performance? And so both considerations, let's say the cuts in sales and efficiency considerations prompted us to cut some 500 jobs, which we will do from, let's say, October onwards. And this will give cost savings of around 50 million, which will become effective in part already next year and completely in 2027. That means we are taking out 50 million of cost from the company in the next 3 or 4 quarters. Okay, this is just an overview. What I already mentioned, we began with the clear strategy to simplify the group structure. We sold one part, a smaller part of the business, which was called Agramco. This is a Danish filling technology company. We merged the automotive division. We set up a new structure at HOMAG. We pushed the integration of the automation in the business of BBS and Team Technic. We were able to sign the sale agreement or selling agreement for environmental technology. And this is what we reached. We are much leaner now. We are much more focused. And on top of this, we'll have the 50 million cost saving from restructuring our automation, our administration. All right. Let's jump to our midterm targets. Everything we do with a view on the margin. That means for the current management, there is still a potential, or from their point of view, to grow sales by 5 to 6%. But what is more important until during the next years, bring up the margin to 8% on a sustainable basis. This is why we are strengthening HOMAG, because HOMAG is able in a normal mid-cycle market environment to achieve an 8% plus margin. The same applies to automation. And in automotive, that means the paint shop business, we have already reached the 8% threshold, which is really, really a high value for that kind of engineering-oriented business. Here you can see that we want to grow, especially in the field of automation, which is the orange part. We will slightly grow the HOMAG business, and the automotive business, which was almost 50% of last year's sales, or 2022 sales, will be reduced to 30%. This doesn't mean a reduction in absolute terms, but it just shows you we will enlarge the business apart or outside the automotive industry. And within the automotive industry, we will keep on growing, but very controlled, because what is more important is to earn money, not to boost the business at any price. And this is what we call our value before volume strategy. Let's have a look at current trading in Q2. Q2 was all in all marked by a quite weak order intake, but which was really mainly attributable to the tariff conflicts and a high degree of uncertainty among our customers. And of course, they need certainty, a secure environment to place large orders. We see that Q3 will still be impacted from this, but this is a question of time. That means we see the HOMAG business recovering. We see a good pipeline in the automotive business, but at the moment, customers are still hesitating to place orders because there is too much uncertainty. Let's jump over this. We have a strong, let's say, basis in our automotive business, the paint shop business, which is well established. We have made this for many, many decades. We are the number one player. We are able to achieve a good margin there. The same applies to the well-established HOMAG business with furniture producers. And on top of this basis, so this is, let's say, the skeleton of Duerr or the core of Duerr. We've got three businesses which we really see over average or above average growth perspectives. One is HOMAG's business with production technology for wooden houses. So we see potential to increase this to up to 500 million euros by 2030. Then production automation, which I just touched, and battery production, which is mainly equipment to produce electrodes for, let's say, e-cars, any kind of local or stationary generators and so on. On top, we have the businesses, as mentioned, the established businesses. Here you can see the automotive business. Very interesting is here the 8.4% margin before extraordinary effects. You can see that since the crisis, we really improved the margin based on the value before volume strategy, and we are clearly above the pre-crisis level of 7%. The same applies, Then we have got woodworking. Here you can see that the margin in last year was lower. This is because we had tremendous demand during the Corona crisis. Afterwards, the market cooled down because everybody had invested in new furniture production technology. But the good thing is that we had a severe drop in earnings, of course, in the margin last year to up to 4%. But the good thing is, based on the efficiency measures we immediately took, that means reducing 600 jobs, we will already this year be able to get to 5% margin or even beyond. That means up to, let's say, 1.5-2 percentage points more margin on the still low sales level. And this is purely self-help measures. Apart from this, we expect the market to recover in terms of demand next year as soon as the tariff conflicts and all the uncertainty with that will have dissolved. Let's put it like this. We have to jump over this because we are running out of time otherwise. What I would like to present you is the outlook. We had a revision of our incoming order target for this year based on weak order intake in Q2, which was driven by the high level of uncertainty. On the other side, and this is what we think is not so usual, is that we upheld our sales target. That means we did not reduce it. We still feel comfortable with reaching at least 4.2 billion euros. And the same applies to the margin. That means we will continue improving the margin step by step already also this year, despite the fact that the environment these days is, of course, pretty adverse, I would say. So this clearly shows you it's not so much about volume, it's mainly about margins. And we will see pretty increase in the margin in Q3 and Q4. And this is also clearly the strategy we want to continue with in the next years. It's always margin before volume. So this is, let's say, the main points I wanted to outline to you, and from then I would be happy to answer your questions. So let's see what I can do for you in that term. Thank you.
Thanks a lot for walking us through the presentation and providing us some deeper insight into your equity story. And of course, we have received a few questions already. And I would like to start with the first one. You've mentioned the order intake and the weak Q1, Q2. Given the order intake in H1 2025 fell sharply, what specific action is management taking to stabilize or increase incoming orders for the remainder of the year?
Okay, so first of all, we have to say that the strong decrease in orders also is pretty much due to a base effect, because we had an extremely strong or high order intake last year, especially from one customer, Mercedes and Sindelfingen. This is a single project with €500 million, which is absolutely uncommon. So it was clear that this could not be repeated. And this is, of course, part of our capacity planning. Apart from this, one answer is, of course, the admin cuts. And on the other side, we are constantly adjusting our capacity in those markets where we feel that capacity utilization could be at risk. But at the moment, we do quite have a good ratio between capacity available and orders, especially as we have a very high, a very good order book, very high orders on hand. So there's still a lot of sales to be generated in the long term, because we have some very long-running projects. And so then let's hope that order intake will recover soon, and then we can go through this with the existing capacity. Otherwise, of course, we would have to cut capacity if order intake would stay at a too low level for too long. But at the moment, no action needed.
Okay, thanks for giving this answer. The next question is regarding the emerging markets. What are the current status and outlook for your business in China and other key emerging markets, given the sector's shifting demand?
Yeah. China as a market has clearly changed during the last 5 years. China used to be a really, let's say, gold rush market after the Lehman crisis in 2011, 12, up to 14. Because at that time, we were really, let's say, the only really capable paint shop supplier in that market, and we earned a lot of money there. Since then, competition has caught up, also in part due to some protection by the Chinese government. But it's still a very interesting market for us, but it's not so dominating anymore than it used before. It's around 16, 17% of order intake these days. Generally speaking, business in emerging markets and smaller markets has always been a strength for Duerr. Let me just give you one example. Saudi Arabia, a country where there is lots of money, and they're stepping forward to establish their own car industry. They have a local brand called Seer. It's CEE.R. And guess who's building the paint shop? That's us, because we are, let's say, certainly best in, building up structures in markets where nobody has ever been before. Also, Lucid is a customer of us investing in Saudi Arabia, and this is really, really interesting business there.
Thanks. A question regarding the opportunities. Can you expand on the growth prospects
Mhm.
and opportunities in the battery production and their impact on
Yeah.
order intake and the profitability of the company?
Battery production is still kind of a wild card activity, I would put it. That means it's something which is, on the one side, very attractive, but on the other side, we see that the market development, that means building up new production capacities for battery cells in Europe, is not as fast as everybody predicted it 3 or 4 years ago. That means basically interesting market, but at the moment, really, to be honest, a lack of demand. We heard all the negative news about Northvolt, about Cellforce, about Varta. And so at the moment, we have to, it's a kind of frozen market at the moment. And what we are doing is taking out some costs, but we are convinced that we have a very good technology. So we have to keep it alive. We don't want to leave the market because there's lots of potential. And the question is when will it come? This is also a technological matter because at the moment, electrode production is done in a wet process. That means you have a wet slurry which is applied on a aluminium foil. And in 2, 3, some years' time, this will be done in a completely new process with not a wet slurry, but a dry powder. That means the future is dry coating. This is exactly what we are working on. So it's a race of innovation. But at the moment, it's not so easy in terms of order intake, I have to admit, certainly.
Okay, then we get it will take a little bit more time until the market gets ready the
Right.
for
That's
the new
exactly, yeah.
technology. Technology also brings me to the next question. Do you see emerging trend or potential opportunities in humanoid robotics?
Um, yes, we do. This might be something very interesting, especially in the field of industrial automation. That means automated assembly processes for that kind of robots. It's not so much in our own, let's say, product portfolio. We do have a lot of robots. We are the largest robot supplier for painting robots, but this is certainly something not humanoid.
Okay, thanks a lot. Actually, that was the final question. No, it's just a thank you from our side, and with this, I actually would conclude the today's session, and I would say thank you, Mr. Christian.